Can Fed rate cuts offset the trade war drag?
I think the Fed rate cuts really are more responsive to the economic cycle and where we are right now. I think the trade tariffs themselves obviously have a lot of slowing impact on the economy, but the real impact is on the way that it changes confidence that investors have, confidence that businesses have. Where do they invest? Where do they build their next factory? It's that longer-term investment cycle that I think is where the real damage is being done from the trade frictions.
What are you seeing in Asia? This is obviously a two-sided trade. Kind of, if this is what the impact on the US is, what about the other engine of global growth, and that is China?
I think it's having a real impact on China, both in terms of investment confidence and consumer confidence. I think we've seen that in both directions. I think it has a broader sense of uncertainty across other markets in Asia, again, because you've seen the data out of Korea, which has been very weak, data out of Japan, which has been very mixed, but still very affected by a lot of these trade tensions. So I think those are real headwinds. And I think the real question investors have right now is what in fact was agreed in Osaka. We know where we aren't, in the sense that we aren't headed towards an escalating tit-for-tat tariffs, one side being put on the other. But we don't really know where we are. We don't know when the negotiators are going to reconvene. We don't know what still is on the table, or indeed whether we're going to be talking about this for another 2 months or another 6 months.